Alrighty. Thank you everyone for hanging out for a couple minutes there. Let's go ahead and get started. Thanks to those of you who have just joined us. My name is Alex. I'm going to be hanging out with you here today. And if you haven't already done so, then do me a favor. And in your GoToWebinar control panel, if you are able to hear my voice and see my screen, then in that control panel, there's a question field. Just type in an OK or a sounds good, something there so that I know that you can hear me. And that is also my secret way of showing you where the question field is. So if during this webinar and after, we're going to have kind of a Q&A, couple of minutes. If you've got anything that you'd like me to cover, go ahead and shoot it in there, and then I will take a look through it at the end of our session here today. And before we get started, just a couple of housekeeping things. One is this webinar is being recorded. So if the internet connection cuts out, if you need to duck out and tune in later, this is being recorded and we will put it onto YouTube, and we will send you the link probably tomorrow once it's all kind of polished and ready to view, and then you can watch it at any time. So it is recorded, and the presentation here I've also converted into a PDF format and put that into the handouts section in the GoToWebinar control panel. So there should be a handouts little tab there that you can click on. I've added the PDF of the slides here so that you can take a look through them, as well as the budgeting Excel template that we're going to be looking at here in a little bit. So if you want both of those, they're in the handouts. If for some reason you don't or are not unable to grab them, just let us know and we can send you a copy. Alrighty, let's go ahead and get started here today. So welcome again to today's webinar. My name is Alex. Today we're going to be going over tips on budgeting for your nonprofit because it's November. It's November 1st, and this is the time of year where, it's cooling down. Summer has kind of come to a close. Getting cozy, the leaves are changing, the kids are getting excited for Christmas. And meanwhile, us adults that are involved with organizations are beginning to have some panic because now this is the time when the year is closing. Christmas programs and fundraisers and events are all typically scheduled within a 60-day window, for everybody, so even, other nonprofits around town are all doing fundraising events right now. And it's the new fiscal year coming up soon, and it's end of year donations, and it's the new year budget, and it's all this different stuff. So this is a fun season for us. And so why not kick it off with a November 1st webinar on tips on budgeting for your nonprofit. So that's me. Welcome. I've been a part of Aplos for, this is my 8th year. I've done a number of things. At the moment, I am the Customer Success Director, which means that I oversee the customer support team, as well as the success team and the services team. So kind of most, if not all, of the kind of customer-facing things that we do at the company kind of is within my purview here. I'm also finishing up my last class that I need. Finish all the tests to get my CPA license. They changed the requirements on me midway through my journey. So now I have to take one more class. So I'm finishing that, and then I'll have my CPA license. So it's quite the season for me as well. And that's me with the little baby on my shoulders there. So for today, nonprofits and churches, you create a budget for a number of reasons. So kind of jumping straight into the content here, a number of reasons you might need a budget. One is you might need it to give to someone else. So someone like the bank might require a budget prior to lending money. So there's external sources. There's people outside of your organization that might want your budget to see how you are planning and or stewarding and or acting compared with how you've planned. So there might be external sources that need a budget from you for whatever reason. There might also be internal purposes or internal people that want to see a budget report, like your board of directors or your elder board for your church may require a budget to ensure that you are spending money in alignment with your purpose. So there's kind of, how you've planned. So let's see if you can develop a plan and stick to it. And then there's also this concept of kind of like mission drift, right? So if you have budgeted within these certain categories, but now you're starting to spend money in these other categories that don't apply and are not to budget, you may not be significantly overspending, so cash flow wise, you still might be fine. But if the budget for, the current year has kind of been set with a specific kind of purpose or mission or something in mind, and you're beginning to now spend money outside of that, that would help your internal team kind of course correct, avoid mission drift there. So there might be some internal purposes for a budget as well. And then there might be both. So you might want to create a budget just to make sure that you have the resources needed to accomplish your purpose. So that could be an external source. We need to adhere to a specific kind of spending plan due to us, having to adhere to certain grant or certain something guidelines. So that's an external influence. And then we might also have a staff or a board generated goal that we want to hit. So there might be things that kind of work in tandem. But either way, a budget is helpful for pretty much anybody involved, because it helps you set goals and stick to those goals and then see how you're doing compared to those goals for, a period of, say, 12 months or so. So today, what we're going to do is we're going to walk through what a budget is kind of basically, and then we're going to look at how to work through developing a budget for your organization. That is going to primarily exist in Excel. So we're going to pop over to Excel here in a little bit, and I'm going to show you some stuff there. We'll also show some tips and tricks for creating a meaningful budget. We're going to discuss how to update a budget as circumstances change during the year, which is referred to as a rolling forecast. And then lastly, we'll look at how to cover how to report on variances to a budget. So once you've developed the budget, implemented it, and now are recording transactions against it, how to kind of evaluate that and see how you're doing. All right. So nonprofits and churches handle their money a little bit differently than businesses, to where nonprofits and churches do what's called fund accounting, which is something that Aplos specializes in, is a brand called fund accounting. And this focus of fund accounting has a purpose of kind of tracking accountability rather than profitability. So in terms of a business, your goal is to make money in order to make more money, right? So you are selling products or services or providing some sort of thing that people then use. And so you want to have good margins so that you create profit, so that you can hire people to further your business and keep going, double down, put the money in, and, grow the company. Nonprofits and churches also need money for similar purposes of growth, but for the most part, this concept of fund accounting means that nonprofits and churches typically operate off of someone else's money. They might self-generate it a little bit, through sales or services of some kind, but for the most part, people either tithe or donate or grant money to one of these entities and need or want that money to be used for a particular purpose. So a grant might say, here's $5,000 and we want you to spend it to accomplish this specific thing, or spend money within these, certain categories. So here's money that we've given you for a purpose. Donors might do the same thing. So you say that you want to build a school in Africa. So here's money to do that. So you now have an obligation to use that money that was given to you for a purpose, for that purpose. So accountability rather than profitability. So in line with this, the budgeting practices within an organization mainly focus on the stewardship of resources rather than profit margins, but both are important. So again, it's not typically a focus on how much money we can make off of doing some sort of product sale or service, but it's a stewardship of resources. It's making sure that the money that you've gotten for whatever reason is properly allocated, tracked, and stewarded well in alignment with your mission and whatever they gave you money for. So think of having a specific purpose for every dollar you receive. The more details you can build into your budget, the more helpful your budget will be. Again, every dollar is kind of earmarked for a purpose, but even if it's general or unrestricted, every dollar that comes in is kind of going to be stewarded or used for a very specific thing. So when budgeting, you're basically creating a plan for that money. You're saying we plan, or we're estimating or forecasting that a certain amount of money is going to come in from these channels, and then with that money, here is how we're going to spend it in order to accomplish these goals. So again, as specific and as granular as you can get within reason, which we're going to take a look at, the better, because then that will help you plan for every one of those dollars and make sure that you're sticking to the plan for those dollars as well. So some common terms in budgeting. Typically, when people think of a budget, they think of an annual budget. Typically refers to a 12-month period covering the fiscal year of an organization that is presented to a bank or board of directors. That should say or. Think of it as set it and forget it. So typically, when people create a budget, they want to say, here's the plan for 12 months, so January through December. Here is how we're going to get money, and here's how we're going to spend money, and these are the amounts that we're planning for, and then ready, set, go. And then for 12 months, all you do is you record transactions, you fit it into one of those categories, you then look at how you're doing compared to your budget, and that's it. With an annual budget, which otherwise known as like a static budget, the budget doesn't really change during the year, but you typically do need to answer questions through the year as to why actual results are different than budgeted results. An example. So let's say that you said we are going to spend $1,200 on event costs throughout the year. Okay. In a typical budgeting system, you'd say $1,200, but for, let's say you're only doing one event during the year, and that's going to be all $1,200, and that happens in June. Well, January through May, nothing. You haven't spent any money for this thing, so it's going to look like, wow, we're really under budget. And then June hits and everything's spent, and then maybe something trickles into July, but then for the remainder of the year, you've kind of accomplished that budget goal now. With certain budgeting softwares, it also might kind of auto divide the amount up over 12 months. Typically, you can customize that, but if it auto divided everything up for 12 months, then for the first half of the year, you're going to look pretty good. You're under budget. And then all 1,200 is going to hit in June. So that way, and then for, July through November, it's going to look like you are over your budget when really it kind of all washes out. But that's what I mean when you kind of typically need to answer questions about your budget throughout the year. So when you go to a board meeting and you say, here's our plan and here's our actuals, what we've recorded against our budget, here's why there's a difference. Maybe it's good, maybe it's bad, but it just kind of depends on what it is and what time of the year it is. Something that can potentially help with that is what's called a rolling forecast. So typically a monthly budget that is updated. This is a monthly budget that's updated at a reoccurring periodic interval, meaning instead of having a static or an annual budget that is set it and forget it, we develop in December for the next year, and then it just sits there. This is something that you do the same thing, but then you allow yourself to kind of reevaluate things on a so often basis. Typically not super often, so maybe like quarterly. You would basically go to a quarterly plan to where every quarter at the end of Q1, Q2, 3, and 4, you reevaluate. So you say, these opportunities have come in, and so we want to kind of shift around the way our budget is developed, so that way we can, more adapt to the year's needs instead of being kind of locked into what we thought we were going to do 6 months ago. At Aplos, we have a rolling forecast that is updated at the close of every month. Part of our closing process is to update the lapsed months with the actuals. So take the actuals from last month, put it in there, compare the actuals with the budgeted numbers, and then update the future forecast numbers with more accurate estimates based on everything that has happened to date. Maybe February was a monster month for you. You got a lot more donations than you thought. And so now you can forecast that you're going to be super over your income budget for this, year. Well, that's great. And you might want to just sit on that money just in case, who knows? You could have a down month in, November. It's hard to tell the future. But what you might want to do is say, man, we still have our same kind of forecast, but this opportunity came in and gave us an extra, couple $1,000s. We want to recycle that and use it this year. So let's update our budget with those, numbers factored in. And a rolling forecast would allow you to kind of make those adaptations throughout the year instead of, again, being kind of locked in to what you thought you were going to do a couple months prior. This is mostly operational, and it's helpful in terms of the budget to stay up to date throughout the year. So that's the rolling forecast. There's another type of budgeting which is called zero-based budgeting, and this is a budgeting methodology where you start with no spending and have to justify every single dollar that's spent to include it in the budget. It's often more helpful with specific categories of expenses than using it for the entire budget. So meaning external marketing is an area where zero-based budgeting makes a lot of sense, meaning external marketing being we're going to spend dollars to go get new customers or traffic or donors to our organization in order for them to potentially buy or give us money or whatever. So with that, you have to make very specific decisions to say, we have to quantify every dollar. So we're not just going to say we're just going to blindly spend, blank amount of money on marketing. We're going to take it as an as needed basis, to where as it generates money for us, we're going to then recycle and unlock that money and put it into something like marketing. But we're going to justify every dollar. If you're having to justify every single dollar for every single budget category, that is going to be very tedious, mostly because some things are just fixed, meaning rent or utilities. Those things just kind of happen. Same with like salary for a large degree as well. If you don't have that just kind of set for what you're expecting for the year and having to justify every dollar before it leaves your organization, it just can be a very time consuming and tedious process. But again, for some things, it works quite well. So that's zero-based budgeting. And then lastly, another term here is you have variance analysis or budget to actual. So this is a comparison of the actual results during a period of time compared to the budgeted results, with explanations of significant differences. So again, we budgeted for this, we spent that. If it's in line, great. If it's not, is it over by a dollar or two? Because if so, whatever, it was a wash. If it was over by $1,000, just depending on what that category is, that could be a significant number. So kind of depends on the category, depends on the organization, depends on cash flow, that kind of stuff. And this is something you typically do on probably a monthly basis, because usually once months close, you've got kind of one whole month's worth of stuff to look at. If you do it on a more frequent basis than that, there just might be some things that are kind of in flux. So it might just be a less accurate report. But this is helpful. This is a very helpful use for budgets, as it can help you understand what the drivers are of financial condition for your church or nonprofit. And this reporting can also help in catching fraud, as material differences will be investigated as a part of this process. So meaning, if you had a office supplies expense account, and your administrator, your office admin was making purchases, and now office supplies is super over budget. There's a lot more spending than you anticipated for office supplies, paper, pens, pencils, that kind of thing. That might be something you want to investigate. What are we spending our money on? Are you buying, energy drinks when you go to the store every time? Is that marking up the budget by $5 or $6 every time? What is happening? That kind of analysis can help, again, keep you within line, keep you from drifting in your mission, but then also just make sure that you're protecting yourself and stewarding your financial resources well. So if people are, tempted to spend money that they can't or shouldn't, this kind of analysis would help you catch those things and keep in line. So special note, so for today, our main purpose of this webinar is going to be to focus on creating a monthly budget with the related impact to cash flow and the balance sheet. Apple specializes in fund accounting, and you guys use fund accounting as part of churches and nonprofits, but for the most part, we're going to ignore the concept of funds at the moment. But if you need a budget that allows you to factor in multiple funds, think of each fund as a miniature version of the same process. So typically when organizations create a budget, you create an org-wide budget, organization-wide. So you say, across the entire organization, here's what we're going to receive and spend. And here's our cash flow projection and that kind of stuff, which is what we're going to look at here today. If you need to do it more specifically for a fund, you'd basically go through the same process of budget development, but you do it per fund, which again, per fund, once you're done doing all the funds, that then would give you kind of the aggregate. So for instance, if you're a church or a nonprofit that has 3 funds, you will essentially create 3 separate budgets. And then once you do that, that covers all the bases within your organization. So the aggregate of those 3 is what you would refer to as your master budget. All right. So what is important when developing a budget? One is detail. So you can never have too much detail. And some people completely geek out on this and have a great time. Some people are just bottom line type of people. I don't care one bit about detail. Just somehow plug in a gross figure and let me be on my way. But when preparing or developing a budget, detail is super important, because you kind of want to allow yourself to get a little bit lost in the weeds here. Reason being is those weeds then build up a lot of your financial decisions. So be a hoarder, collect as much data as you can, even if you don't even use half of it, just get it. So from whatever accounting software you have, pull reports, pull transaction list reports, pull income statements, pull previous budget to actuals, pull balance sheets, pull anything that you can, and just collect it. obviously our preferred version is to collect it in Excel, because then you can copy and paste and write formulas that then kind of cross compare data. But really here, you're looking to basically cover all of your bases. So you don't want to get to a spot where you're trying to budget for something and then have no data on what to do for it. So, which we'll get into in a little bit here. So another thing to factor in is collaboration. So you're going to want to involve the people that are involved, meaning if you have a staff of, say, 30 people and you have different departments or ministry heads, and then they have kind of opinions on what, the budget amounts or categories or trends should be, involve them. You might have the final say so, but you're going to want their feedback to kind of make sure that you are factoring things in well, correctly. So for instance, if you're working for a church and you have, developing a master budget, and part of that is the kids ministry, and you don't know anything about kids other than that they're small humans. You don't know what they spend their money on. You have no idea how much goldfish cost. You don't know if you need to stock diapers or whatever. That is something that someone that works in that ministry might have some 2 cents for. So you might want to collaborate with them, ask them questions, say, hey, what's going on? What do you need money for? What's going, what materials do you need? What would be a healthy budget? Get their opinion, because they might have, this might be just kind of a side point, but including your staff in this would also give them a little bit of buy-in to what their budget is as well. So just saying, here's how much money you can spend this year, have fun. They've now been a part of that process that says, I've been, dissatisfied or disgruntled, or, I have opinions on what we need to, do. So I'm going to voice my opinion. I feel like I'm involved. I feel like I'm being, consulted with something that is very important to me. And then you, as a kind of budget preparer, now have checked the box of saying, we've collaborated. I've gotten your opinion. If it's different than what you want, then I at least have factored in your considerations. So, involve who's involved. So bring people in. Again, even if you have the kind of the final say, collect as much data as you can. Again, this is kind of going back to detail. So in terms of just personnel and more, qualitative factors, just collect as much as you can, collaborate the information, and that way you can make the best decision for your entire organization. And then financial data, same kind of with the detail. Be a hoarder, get all of the relevant reports, go run income statements, transaction lists, anything that you can from your financial system. And then back to detail, also collect external things. So other stuff you need to factor in, loan documents, let's see, other things like you as an organization might have other documents that are just internal, policies and procedures. So, a capitalization policy on, purchases over a certain value are going to be considered fixed assets and not expenses, and we're going to depreciate them over certain life cycles. That detail is also important to collect. If you have grants or certain, stipulations, different agencies that are telling you or influencing the way that you need to handle your money, collect that detail as well. So again, anything you can think of, just get it all into, a room, start to play out the beautiful mind scenario, start tying threads between different pieces of paper, just collect as much as you can and involve who's involved. And then you'll be ready to begin this process. So in terms of the financial data, what should you collect? So there might be some other stuff than this, but this is just a general guide of maybe where to start. So it's November, so this is actually a good example. Let's say that we're going to develop the budget for 2019. Okay, it's November. We're going to get started. It's the first. Let's go. So go run the balance sheet for the most recently reconciled month. You might want to give that a day or two to let October close, and then you work with from October. But let's just say that October now is caught up, done, reconciled, finalized, everything. We're going to go get the balance sheet for October, for the most recently bank reconciled month, October. You're also going to want to grab the income statement by month for the current fiscal year through the most recently reconciled month. So again, let's just assume that we're running on a January through December fiscal year in line with the calendar year. So I'm going to get my income statement by month, which is typically a report that formats your income statement to be columns for each month. So each column would be, January, February, all the way through October, with probably a total column in there as well. So grab that. And all of these reports, again, if you're going to dump them into Excel, try to download them into an Excel or CSV format, so that way you can copy and paste things appropriately. So income statement by month. You're also going to want the income statement by month for at least one prior fiscal year, if possible. if possible, meaning if you were in existence last year and you actually have a financial system that you can get this thing from. So go grab that, again, January through December for, say, 2017, right? If that's not possible, judgments are just going to be a little bit more difficult due to the lack of comparability. Meaning, if I'm budgeting for, again, just office supplies is going to be my scapegoat expense account here for the majority of the webinar. Office supplies, if I'm trying to budget for that for 2019 and all I have is data from 2018, then I don't really know what to factor in. I mean, I'd probably just say, okay, well, whatever we did this year, do next year, with, maybe, well, we're going to hire a staff person and move locations, so maybe increase it a little bit. But having prior years would allow you to kind of see trends and make decisions off of that. So, for instance, if office supplies hasn't moved for the last couple of years and it's still under budget, then leave it alone. But if you've consistently been over budget and it's been valid reasons, that might warrant into you wanting to more appropriately budget for the next year. To factor that in, because if you've been under budget consistently, maybe that's something that you just want to not be for the next year. So again, if possible, if you can include more than 1 year, 2 is a good amount, if possible, because again, the more data you have and the more you can look back, the more comparability you have. Probably anything more than 2 years might be overkill. Again, it just kind of depends. If you're trying to compare office supplies for the last 15 years, boy, the last 2 are probably the only 2 that matter. Operations change, things change. So really only looking 2 years back would give you kind of a relevant time period that is somewhat comparable to what today's needs might be. Office supplies 10 years ago probably going to be significantly different than they were today. Balance sheet for the most reconciled month. I don't know why that's there. That was listed above, so ignore that. You're also going to want to grab the balance sheet as of the end of each previous fiscal year being compared. So let's say we are able to get 2017's data. I want to get the balance sheet for 12/31/17 and the current one. So I want to see where the cash and balance sheet was as of the end of last fiscal year. That will basically tell me what is, what's transpired in the last 10 months or so. I would also even go back maybe 1 year. So let's say that 2017 is the prior year and you can get the income statement by month for that year. I would grab the balance sheet for the end of 16, the income statement for 17, the balance sheet for the end of 17, and then the current year reports. That would give you kind of the starting cash for 17, the activity with the income statement, and then the ending cash and balance sheet for 17, which again starts you with 18, and then you have the current year stuff. So again, grab that stuff if you can. You're also going to want to grab any updated income or expense categories that you want to use in the coming fiscal year. So meaning if you have said, we're going to reorganize the way that we do groups and teams and staffing positions, and or, we've been holding on to these expense accounts since, the DOS system that we started with 20 years ago, let's redo the way that we're going to classify income and expenses. So get those changes, factor those in, because those are going to be the new categories that you budget for the current year, for the coming fiscal year. And then any other considerations to factor into the budget. So again, grant guidelines, any board goals or designations. So any external or internal kind of guidelines for how you need to use your money. Also any cash flow needs. So meaning if you have a mortgage or if you have debt repayment or liabilities that you need to factor in, grab the detail on those as well. And then the obligations. So same kind of thing. If you owe anybody money, figure out how much and why and when's it due and all that stuff. Get all that, because that's all going to be factored into how your cash flow works for the coming year. So as we get through this, we're going to start looking in Excel here in a minute. Excel is going to be your best friend. Export everything that you can and start combining things in Excel. If you're not comfortable with Excel, like most people, now is a great time to learn. There are some very basic things that you can do in Excel that will save you a lot of time and are really not super complicated. So just some even basic, summing formulas, some averages, this minus this, this times this, just basic kind of math factored into an Excel spreadsheet is super helpful. As we go through this, we have some more above average things factored into our template, which I will do my best to explain, but it's very likely that we're going to cover things over your level or comfort level with Excel. If that's the case, don't worry about it. Let me know if I can help answer any questions. I will do my best. But for the most part, again, now's just a good time to learn. So even if you don't use our template, if you want to kind of start from scratch and factor things in and then learn as you grow, that's completely fine as well. And last point there is it's also possible that you're a lot better than me in Excel, and I take things very personally as it comes to Excel. So just don't tell me and just act like I'm the best, and that will help my self-esteem. Just kidding. All righty, time for Excel. So let's take a look. Okay, so this is the template. So again, this is in the handouts that I've provided you. And a lot of this is going to be kind of skipping a rock because we only have an hour here today, and you could probably dump a good 10 to 12 hour session in just Excel, which I won't subject you to today because it's early. So for now, what we're going to do is just kind of take a look through the tabs here. I'll kind of explain the logic here, and then we'll go through some very basic usage, and then you can take it from there. Okay. Let me just make sure that there's no pertinent questions here. Nothing that can't wait till the end. Okay, good deal. So let's take a look at Excel. So again, let's say that you've collected all the information that you need to collect. You've gotten all the, reports and all the guidelines and all those things that you're going to need. Start combining things into Excel. So the way that we formatted this is I have a tab here, which is the first one, which is my working budget, meaning this is where stuff is going to go. Okay, these are going to be your working numbers. This is where you're going to play. And then over here, we have a future year, so 2019 working cash flow, which I'll explain here in a little bit. But basically what this is going to do is it's going to factor in what's my cash now. And then as I begin to forecast my budget for each of the next 14 months, which I'll explain here in a second, this is how it's going to impact my cash flow up until the end of the next fiscal year. Okay, we'll take a look at that in a minute. And then we added the tab here, which is basically just a barrier. So it's saying anything to the left of this is working. So you can do stuff. You can make edits. You can mess with it. Have fun. Anything to the right of the little arrows here that is marked in a red text is basically leave it alone. These are source documents. So this is where I'm going to be pasting all of my reports that I've tried to collect in Excel. So for instance, my balance sheet as of the most recently reconciled month, which is October, I'm going to paste that here. So I'm going to put that right here, and then it's going to list all of my assets, all my liabilities, my funds or my equity, their totals as of 10/31/18. And so now this is here for me to reference either in a formula or just by going through and looking at it. But here's my balance sheet. Same with my income statement by month. For 2017 and 2018, so prior year, current year. Copy and paste there. And then just do the same thing for whatever period of time that you need to factor in. So you might have 3 or 4 years worth of income statements by month, counting the current year that you want to plug in. So create a tab, copy and paste it, and then leave it alone. If it's to the right of the red, leave it, because it's just going to sit there. And this is also source data too. So if you get a little, funky over here with some formulas and, lose your way a little bit, these will always just be the original documents here. So that way you can go back and see, oh, okay, yeah, I messed with it. I need to go take this number and put it back in to the calculation, that kind of thing. So let's say that we've got the balance sheet as of the most recently reconciled month, October of 18. We also have our income statement by month for 17 and 18. So now that we've collected these, now we can go to the working budget and the working cash flow. So the first thing that I would do here is I would input what my starting cash balance is as of the end of October as my starting gun here. So this now is going to be, let's just say that I've got $10,000 in here. Okay. So what this is doing is it's saying you're starting with $10,000. So again, this is where you reference the ending cash for the most recently reconciled month. I keep wanting to say reconciled. Anyway, $10,000. So now this formula here is saying what I'm going to do is I'm going to say this cell plus or minus whatever I result here with my ending cash flow, which I'll explain here in a second, is then going to be factored in and added to or taken away from that beginning cash estimate there. And then this is repeated for every single month. So it's basically saying as I start to work in my working document over here, it's going to impact my future cash flow. So that way, if you get a little funky with your budgeting and you end up, over budgeting yourself by a significant amount and you go, it's probably not that big of a deal, you can say, oh yeah, it becomes a big deal when we have negative $5,000 in our bank account forecasted for April, So that kind of stuff is easy to do when you're not kind of factoring both things in. So do that first, put in your ending cash, and then go over to the working budget. So here is where you will now begin to plug some stuff in. So we have it kind of factored in for the most recently completed year, so 2017, as well as the current year, as well as the future year, okay? And just to kind of break things up a little bit, I'm going to highlight the end of these columns here in, I don't like yellow in Excel. Let's do this orangey, peachy color. So that's the end of 17. And then we also have the end of the current period, which is 18. We have the end of the 18 year altogether. And then we have the end of 19. So from my document here, which was my income statement by month for 17, I'm going to copy and paste all of my income accounts and all of my expense accounts. And then I'm going to copy and paste, again, all of my totals for those income and expense accounts for January through February and through December of my 17 year. So this is basically going to be a redundant copy and paste of your 2017 totals. I'm also going to do the same thing with my January to date. So again, January through October income statement by month for January all the way through October, because that's the most recently completed month. So that's going to give me a year and almost two worth of actuals data. So this is saying I actually spent or received this much for January in this category, So this is, again, beginning to kind of cross compare. So where this begins to be a little bit more loose is at the end of October, we are only on November 1st. So we don't know what these numbers are yet. We might have spent a bunch of money this morning, but for the most part, the month is not done yet. So what this is going to do is this is the start of your budget. So these figures here, these might be figures that you can start to plug in that are already from a pre-existing budget. So maybe you budgeted for 18 already. So what you're going to do here is you're going to plug in your actuals for October all the way back, however far back you're going. And then starting here with these orange cells, this is going to start to be forecasted numbers. So you can copy and paste, again, for all these different categories here, copy and paste your current budget figures for November and December of 18. So this is basically just going to say, actuals are here prior, and then based on how we budgeted for these last 2 months, we're just going to say that is the way it's going to go. Okay. How we budgeted for these 2 months is just what's going to happen. So let's just say that plan is going to go according to plan. And then in January is now where you start playing with new numbers. So what this is doing is it's saying, looking at the prior year, looking at year to date, and then factoring in the last 2 months of the year as just being according to budget, we should end the year with, these totals over here. So this total over here is saying at the end of, this should be 17, excuse me. And this should be 18, and this should be 19. So these cells over here are summing. So this is saying, show me the sum of everything in this row that is before the date of 2018, but after 17. So it's basically saying, bring me back the total of 2017. And that is an actual total. So here's all the totals for all of my categories for 2017. And then here's my 2018 estimated total, because we're factoring in 2 months that haven't happened yet. So between 10 months of actuals and 2 months of estimates, this is where my 2018 year should end for each one of these categories. And then here's my 2019 budgeting total. So what I'm going to start to do is, again, I'm copying and pasting from 2017 and 18, factoring in the current budget for November and December here. And then once I start to plug in numbers on how I then want to budget for these things in 2019, you have some kind of truncated totals here on the very right, which say, we budgeted for office supplies for 1,000 here and 1,100 here and then 1,200 here. So now you can kind of see all of them side by side and begin to see trends and work with these numbers. Again, this is where you're going to spend most of your time. So as you begin to plug in these numbers, it's going to add to the totals down here, which is going to be a percent. This is a percentage. So this is basically saying if I factored in, $100 here, then that's going to add to the sum down here. So 500, 500 and 500 there. Okay. So then that is dividing, let's see, this is dividing across the total for the last year. So let's just throw 1,000 over here. So this is saying, compared with last year, I'm now 110% over my budget of last year. So this kind of calculation here is going to help you kind of keep in line with, overages or averages compared with your prior year. But again, all of these things are open cells. So the only kind of formulas here are the ones that are highlighted in gray. So these are all kind of things that you don't really want to mess with. Everything else is a data point that you're factoring in. So you're plugging numbers in here. You're seeing how it then sums to the bottom. You're seeing how that compares year over year. You're seeing how that then is a percentage across my prior year stuff. So this is your working document to play in, with whatever you need to factor in here. So I've been kind of largely in this income section. It's the same for expenses here. So again, all of your expense accounts, all of your expense totals for 17, 18, the last two budgets, and then the current, or the next fiscal year that you're factoring in here. And then the last thing I want to mention here is at the bottom, so what this is going to do, let's say that I'm going to factor in $10,000 worth of income here. And then my expenses is $8,000. So let's just plug that in there. So this is summing down here at the bottom. So here's my total expense. So my net income, my income minus my expense for this projected forecasted month is 2,000. So now what I want to do is this is going to take that. So what this is doing is now this is factoring in what I'm going to be receiving or kind of finishing the month with compared to my budget. And then this is all your stuff here down below that is not going to be an income or expense category, but it's stuff that's going to hit your cash flow. Meaning if I need to make debt payments of $300 this month, I'm going to do that. I have some outstanding accounts payable for 50. I have a mortgage for 1,000. And then let's just say that those are blank. So this is now saying you are budgeting for a net income of $2,000, but you also have this other cash flow need, which is going to reduce your cash flow by $1,350. So now if I go over to my working cash flow, what this is doing is it's factoring in the fact that I have a net income of 2,000, but then a net decrease of 1,350. So if everything goes according to plan, at the end of November, I should end November with $10,650 in cash. So that's how those two spreadsheets begin to play with one another. So again, copy and paste everything that you can to the right of this little barrier here. And then your working documents here is your cash flow, again, starting with what cash you're ending with in the most recently reconciled month. And then this formula is factoring in that plus or minus the net result of your net income and your other cash flow needs for all things future. So as you begin to play with these numbers, these open cells here that you can type things into, that is then going to populate those numbers, which is going to impact your cash flow. And so once you've kind of planned for and developed all the things that you can think of, that will then end you with your 2019 budget, which is all these purple things, for the 2019 year. And if also factored in correctly all of your your external kind of cash needs things here, then you should be able to equally look at this document here and say, if we do everything according to our budget, which we have now deemed as healthy, then we should end the year with, blank number, $15,000. Let's say you have an increase of $5,000. So that would be the overall kind of plan and development of that budget here in Excel. Now, again, I would consider that this is a above average document here in Excel. This is factoring in things like compounding kind of formulas here. This has also got some sum-ifs formulas over here on the right to factor in things like, show me the totals in this column if the date range is before this, after this, and the sun is going down, it's 2 p.m. and it's a Thursday. It's factoring in all of those things to kind of produce that number, which again is extremely helpful. Excel is a monstrously helpful tool once you can get a hold on it. And there are some kind of more basic ways to accomplish these more complicated formulas here. The logic is actually kind of straightforward if you know how to write the formula. So have fun. There are easier ways to do some of this. So again, you could do something as easy as building this right here with some summing, and then ignore all the sum if stuff and just take a look at these columns here. Simply do, sum formulas. So this is saying equals everything above it. So even something as simple as that can help begin to develop this budget for you without having to do everything by hand or just do it completely like qualitatively where you're just doing it in your head, thinking that, oh, we'll just increase the budget by $50 over here, Again, the more granular, the more detailed, the more kind of math centric you can be, the more accurate your budget should be, and the more specific you can be with your forecast for the coming year. All right. So that was the Excel portion. So let's get back to the presentation here for just a couple of minutes. So once you've developed this budget, let's say that you did all that, and now you've said, great, we now have our 2019 budget. What you're going to want to do is go over to your accounting software like Aplos and put it in and make sure that you have factored in month-to-month variability, meaning like my previous example, if you have an event later in the year and you typed in that my budget for this year is $1,200 for event expense, that it doesn't just divide it by 12 and now you are under and then over budget depending on what month you then look at your budget report. You might want to just say we're factoring in nothing until we get to June when that event is, and that's all 1,200. So if you can divvy it up by month, that is beneficial. Aplos also allows you to budget for income and expenses. You can also kind of expand your budget to be budgeting by tag or by fund, both other kind of parameters that you can use in Aplos. So outside of your income and expense, you can also budget by a larger category, fund or tag. That could probably be its own webinar at some point, but if you have questions, let us know. And again, a good practice to review is to look at your budget reports on a monthly basis. So as a part of your kind of month-end either board meeting or staff, evaluation, balance sheet, income statement, budget to actual budget report is something that's very healthy to take a look at on a monthly basis once all of the things have been factored in for the month. Types of budget reports you might look at is a year to date. So let's just say it's November now. So a year to date would be show me my budget and my actuals for January through October. So it's looking at 10 months in the aggregate altogether. So it's a year to date report. You can also do a current month versus last month, which is exactly how it sounds. I want to look at October versus September or November versus October. You can also look at the current month versus last year. So you can say, show me October 18 versus October 17. Are we significantly different? And then you can also, sorry, there's a little bit of typo there. Current month versus last year should have been current month versus year. So you can say, show me October versus my year to date, right? And then comparatively, which is what I mentioned a second ago, where you'd say October versus October or January through October this year through January compared to January through October last year. So again, giving you some comparability to say, we're not super different than we were last year, or we are, and that's good. Last year we were significantly off budget by this time in the year, and now we're not. So that kind of stuff is super helpful. So what to look for when you're looking at your budget is, are you meeting your income and expense goals? So whatever you forecasted for, are you hitting that number? Are you meeting your cash flow projections? So again, once you're factoring in income expense as well as other reasons why your cash decreases, like debt payment or other obligations, are you meeting your cash flow projections? Are you over or under on either? Are your variances accurate or reasonable? So you might be over or under budget, and that might be for a good reason. So are you kind of healthy there? And then if you're doing kind of a more rolling forecast, do budget totals need to be adjusted to reflect anything? So again, maybe you had a monster month that you weren't expecting. Do you need to update your budget for that? Or maybe you had a monster month for another reason and it's bad. So do you need to reflect some of your spending to kind of compensate for maybe getting hit with something that you didn't expect early in the year? So recap, we covered a good amount today. So we walked through what a budget is. We worked through how to begin developing a budget for your organization, showed some tips and tricks for creating a meaningful budget, primarily in Excel, showed how to update a budget as circumstances change, which is a rolling forecast, and then as well as how to report on variances to budget once you have it and can have actuals to compare to it. So my quick little shameless plug here is I've been mentioning Aplos throughout, but Applos is a great system for fund accounting. We also have kind of a lot of other factors that would be beneficial for nonprofits and churches. That is our core demographic there. We can help you track fund and tag budgets, as well as just a normal kind of static or rolling forecast budget for your entire organization. So we keep people and nonprofits, churches specifically, healthy and accountable through the use of our fund accounting system. But keep in mind that the majority of good budget development happens outside of your financial system. Your financial system, for the most part, is where you record stuff and pull reports. It's a recording system for what has transpired and what you're planning. So budget development is more of a quantitative and qualitative process that is it's a collaborative, detail-oriented thing that you can't really expect from your accounting system. Your accounting system can track your budget once you know what it is, but in order to know what it is, good budget development happens outside of your financial system. So pull what you can from it. But then again, Excel is going to be your best friend. And if you have not learned it, now is a great time. Again, it's a extremely powerful tool, even in its basicness. Even if you only know a couple of basic formulas, it can still significantly enhance your process there. So try to learn Excel if you can, or Numbers or Google Sheets, whatever you end up using. So let's do some Q&A. We've got about 5 minutes. I'm sorry I kind of talked a lot there, but I will do my best to answer some questions here. So go ahead and submit those. If I don't get to anything, I'll do my best to kind of cover everything via an email after the session here. First question is, can you talk more about zero-based budgeting, specifically how you would not go over budget if you use this methodology? Yeah, so zero-based budgeting is more of you don't really budget for anything. It's more of saying with every purchase or expense that we're going to do, we have to approve it and justify it, and then we'll technically budget for it. But really all you've budgeted for is what you've already approved. So for instance, if I'm going to go, maybe I don't have a travel budget to say we're going to spend $1,000 on travel. I buy an airplane ticket, or I want to, and I say it's going to be $500.40. So I would say, here, can I go? It's going to be $500.40. And you would say, great, approved. I would then, enter that as a budget. I've now budgeted for $500.40. I make the purchase, which should be the exact amount that I've budgeted for and gotten approved. So you would essentially just kind of budget and approve things as you go, kind of case by case basis. Do you have enough of an understanding of Google Sheets in your note to talk? Yeah, so Google Sheets and Excel are actually very, very similar. People that are hardcore Excel people might disagree with me, but I know a fair amount of Excel. I don't know how to create consciousness or anything in it, like some people can, but I can do some damage. And I end up using Google Sheets for most, if not all, of what I actually do on a daily basis. The formulas are generally the same. You can customize Google Sheets to kind of use the same formula syntax as well as the keystrokes that you might be used to with Excel. And so Google Sheets would actually be a great replacement for Excel if you don't have access to Excel. Some benefits of one or the other, Google Sheets, you can, and again, you might be able to do these things with the others, but I just don't know. With Google Sheets, you can collaborate more easily. So you can invite people to share the same access to the same spreadsheet without having to share a file. The downside to it is it's web-based. So if you don't have access to the internet, it's hard to use Google Sheets and collaborate that way. As well as if your internet connection is not that great and you have a pretty heavy spreadsheet going, it might drag a little bit. Likewise, in Excel, it's a file, so you kind of lose some shareability there, but it's on your local system, so that way boot up and formulas and calculations and stuff might run a little bit faster than they would in Google Sheets. And typically, Excel has some more crazy features that you can end up using. So if you are an above average user of Excel, you might just prefer to use Excel. But for the kind of lay person or someone that doesn't need to get super fancy and or just an average person, Google Sheets would probably be pretty great. Yes, the recording will be made available. We'll send that to you in a link probably tomorrow. How do you plug numbers into Applos? Once you have access to Applos, there's a budgeting screen where you can say, here's my 2019 budget, and then it brings you to a screen that says, great, here's all your categories, here's your income and expense. And then there should be an open field there where you can start to type in what your budget numbers are for each category for the year that you're budgeting for. If we are moving to Applos and had not done much budgeting, the budgeting is done from the previous chart of accounts. Yeah, for the most part. I mean, when you do a budget in any system, and specifically in Applos, you are setting a budget or a projection or a forecast for income and expense accounts. So if you already have a chart of accounts from a previous system, and you can give that to us and we'll import it for you. We can put that chart of accounts into Applos, so that way it's income and expense categories that you're familiar with, and then you go from there. So if you want to customize them, you can. If you want to delete them, you can. If you want to leave them the way that they are and just assign budget numbers to them, go for it. Typically, my little soapbox on it is I usually recommend people at least being open to change their chart of accounts once they come to Applos, because we do fund accounting, which is inherently different than most other systems out there. So, some things might not translate. You might have done things in your chart of accounts to factor in, funds or kind of compensate for certain things that we might just be able to do more easily. So I typically recommend people that are coming to Applos for the first time at least talk with us and try to understand what our categories are, because we might be able to help simplify some of your chart of accounts there before you plug in numbers and begin to use it. Because once you do, it's kind of locked in. So Ryan, you told me to ignore something, so I will. And it is 10 o'clock and I have no more questions, which is fantastic. Good timing. So I hope today was helpful. Again, in the handout section of this webinar is the working kind of Excel file that I was using, as well as a PDF version of this presentation. Feel free to grab those, download them, and use them for whatever you need. If you have further questions, shoot us an email. Our email is support, support @applos, aplos.com. We'd be more than happy to answer any questions related to the software. If it's something related to budgeting and accounting specifically, a little bit more specific, we might not be able to give you a ton of help there, but give it a shot. Ask us a question. We'll do our best to help. So, and again, this webinar was recorded, so we'll throw it on YouTube and send you the link here pretty soon. And that way you've got it for later access if you need it. Okay, well, thank you guys very much for hanging out with me for a little bit here today. Again, if you have questions, let us know. But otherwise, enjoy this process. Try to take a breath, get a good, strong, tall cup of coffee, and get at it. And if you have any questions, let us know. Okay, good luck, and we'll see you next time.